Marijuana business loans. Should you get one? If you don't know me, I'm Chris. I've been in the wholesale business since 2004, and I've also held one of California's earliest state distribution licenses back in 2018. I built and sold a licensed cultivation facility that I scaled to $3 million in annual revenue. Then I started Zodix in 2022, which has been in over 100 licensed retail stores throughout California. Following that up in 2024, launching my other brand, Lowski, providing fire indoor for the low. Today, I teach cannabis entrepreneurs how to hit $100,000 months with their licensed cannabis brands without owning a license. We go over how to scale your cannabis brand every day on our private school community, as well as the one-on-one guidance program I have for cannabis entrepreneurs. The link's in the description for both. So I'm gonna start this off with the broad federal strokes about cannabis banking. And there's been what's called a Safe Banking Act, which has been trying to get pushed through federal legislation for many years now, and it keeps getting stalled out, it keeps getting blocked. So as of now, it still hasn't gone through. And what that Safe Banking Act would do would allow for regular banks to provide financial services to licensed cannabis businesses. Even though it's still federally illegal, they'll still allow licensed state cannabis businesses to have all the same banking services as any other business would or should. And what it does is it allows cannabis businesses that are licensed in their state to have access to actual banking that every other business has access to. It's only natural that cannabis, which is actually a bit more of a difficult business, especially for the license holders, they should have access to this banking. Instead, we have to have all these convoluted issues when it comes to banking, whether that be dealing with accounts getting shut down or having to pay exorbitant fees to just have these cannabis accounts, which are bulky to use. You can't use Zelle with them. You're lucky if you get an ATM card with them. You have to call armored truck to come pick up your deposit. You can't just run to the ATM or something. It's just not practical to have these bank accounts and run a smooth business these days. So until the Safe Banking Act goes through or something there like it, as of now, we can't use regular banks for plant touching businesses. So that means if you're a license holder in the cannabis space, it's gonna be difficult to get a regular bank account, or if they start seeing certain transactions that identify such as being a cannabis business, they'll just shut you down with no questions asked. And it's happened to me many, many times with many different businesses, as well as in my first distribution company. We had our bank shut down because we had a check deposited that came from a manufacturing company and it triggered something. So it's all these things you don't know until it's too late. It's kind of like losing an account on IG. It's the same feeling you get when you lose a bank account. So that unfortunately sucks for our industry, but it's just what we're up against, what we got to deal with. And again, when we have these challenges, I'm actually grateful for them because it allows other people to avoid this industry. There's a lot of regular straight-laced business people that are just like, if I can't even do regular banking, I'm not even gonna jump into that industry. So it allows more space for us to maintain what we're doing and to grow that and have less financial competition against us. Because that's really what kills this industry, is the heavy injections of money. Because that's really what kills this industry, is the heavy injections of money, especially from private equity, because they have no regard on the small guy. They're just pumping their investments and trying to push the small guy out by economies of scale. So the first one we have, Safe Banking Act, that's a no-go right now. Next one we have is specialized cannabis lenders. We'll say specialized marijuana lenders, since that's what the title is. And so that's good to go because these are usually either private equity, which doesn't have the same stipulations as a bank would. A bank is controlled federally and it's also insured by the FDIC, so that's why they have to follow the federal regulations. Otherwise, they'll be out of compliance. With private equity, for instance, private equity basically just stands for a bunch of rich people, and they put their money together either in their own fund, like a family office, or they pool it together in actual investment funds that are actually going out to target investments based in certain industries. It doesn't have to be cannabis. All industries have private equity. And so in the early days of legalization, especially here in California, a lot of private equity was jumping in and they were backing a lot of companies that were not stable. A lot of companies that just ended up folding and falling through because no one knew what to expect with these markets. Everyone was trying to do a copy and paste from all these other business industries, and no one could account for the variables that licensed cannabis had in store. So once these private equity firms started realizing the challenges, the struggles, the risk, the losses, they started pulling out. And so now we're in 2025, halfway through, and just talking to some people close to me that are high up there in cannabis fundraising, they told me that this year is the hardest to raise even $1 million. There's people out there that have raised $25, $50 million, and they can't even raise $1 million right now for a cannabis business. So even the best of the best out there are having trouble raising private equity money right now, because everyone knows getting into the license side, owning the licenses, owning the cultivations, owning the manufacturing, owning the retails, there's almost no profit in it. It's a very challenging uphill battle to make those businesses work. And it's really the entire infrastructure that allows the brands to operate. So if you think about it, you have cultivation, you have manufacturing, you have distribution, and you have retail. So cultivation, manufacturing, distro, and retail. So this is the license supply chain. This is a license, this is a license, this is a license, this is a license. Now in New York, it's going to be called a processor license. Each state has their own names, but pretty much cultivation, we all know that, it's your grow. Manufacturing, processing, same thing. Distro, same thing. In most states, you're going to call it distribution license. And there's two types. There's a wholesale, and then there's retail distribution. And so with retail, that's what we're talking about today. Wholesale is like the bulk packs where you just go into the showrooms and they're just hella turkey bags and you're just shopping for packs. So that's for a different video, but today we're gonna talk about retail distribution. So this supply chain here, this is all plant touching. And then let me it's my attempt at drawing a crown because the brand is king. So the brand basically taps in to all these, but you see it never touches it. So it just interfaces with it. So basically the brand can still get a Wells Fargo, Bank of America, any of the other banks. Everything in blue here can't. They need special cannabis banking. So if you're gonna get specialized marijuana lenders, whether that's private equity or hard money loans or private capital, it's gonna come at a high interest rate. So, and it's gonna have strict stipulations. You're probably gonna wanna see tax returns. They're gonna wanna see your P&Ls. They're gonna wanna see your bank statements. So it's gonna be a very intrusive process. And if you don't have the track record to prove it, you might as well not even waste your time. So if you're watching this far, it means this type of content is exactly for you. Join the school community, it's free. The link is below. And that's where we work on cannabis brands every day. We talk to other people just like yourself, how they can scale their brands further, and especially how they can leverage the license market without owning a license. And this is the most profitable position to be in the license market. As I was saying, these license holders in blue, they make the lowest profit and the highest risk. This has the lowest risk and the highest profit. So this is gonna have way more headaches, way more moving parts, way more systems, operations, people to manage, compliance, transfers, storage, robberies, insurance, renewals, licenses, inspections, surprise inspections. I'm sure I left some stuff off the list, but if any of you have dealt with the license market, you understand that owning a license, not only working for a license, is a huge undertaking, huge headache, a lot of money it costs. As a brand, you're just the customer of all these licenses, basically. So it's like owning a restaurant versus eating at a restaurant. Would you want to be the person that's owning the restaurant, dealing with spoilage, dealing with employees, dealing with hiring new people, dealing with the health department, dealing with the state license, dealing with the compliance, dealing with the landlord, paying the rent, all this stuff? Or would you rather just show up, eat a good meal, get waited on hand and foot, and then pay your bill and leave and go home and not have to think about anything? And so that's basically the brand. They're pulling up to the restaurant, they're eating their meal, they're getting what they want from the grow, They're having the manufacturer do their manufacturing. They're having their distro bring it to the stores. Then the stores are paying the distro. Then the distro is paying the brands. Then the brands putting it into their bank account because it's marketing money. They're not touching the weed. So this brand never touches the weed. The cultivator grows it, the manufacturer packages it, the distro tests it, and they deliver it to the retail. The retail sells it to the customer. So at not one point does this brand ever touch any weed. And that's how this is a non-plant touching asset light model. That's the corporate term. The Chads and the Brads will call it asset light. And what that means is they look at these licenses as assets. Even though they're major liabilities, the Chads and the Brads call it assets because they paid hundreds of millions of dollars in some cases. And so on their balance sheets to their investors, they still refer to them as assets, even though you and I, we both know that they're huge liabilities. So asset light means you're light on the licenses. So I would rather call this a liability light model. That's what, selling weed on the streets, just having a hustler mindset. It's like, yo, why do I want to take on all that liability when I could let all these guys take on the liability, and I'm going to be asset light. I'm going to maneuver. I'm going to be able to travel, do what I need to do, promote the brand, market. So the next one that's pretty good is government-backed hemp loans through the SBA and the USDA. So it's crazy because if you've seen any of my other videos, you know that hemp is the same as cannabis. They're the same plants. It's like trying to say that an American and a Canadian aren't human. They're both human. It's the same thing. They're just different. They come from different places, basically. It's just, they're different, but they're not. So anyway, the government-backed loans, since they legalized hemp back in 2018, you can get an SBA loan as long as it's fully under hemp products. Nothing tests over 0.3% THCA, nothing tests over 0.3% THC. So this means your THCA brand, vape carts, pre-rolls, anything that is below 0.3% Delta 9 THC, you can get under this loan. So that could be farms, that could be manufacturing / processing. You could use that money for your brand. So if you have a good track record and some good credit and some good bank statements, it's worth a shot going for an SBA loan. And if you're only covering a brand, you may not even have to apply for the hemp part. You could probably just get a regular SBA small business loan. And a lot of those come at lower interest rates because it's SBA and government backed, or it's easier criteria to get a larger amount for, maybe a little bit of a higher risk person, but you're still gonna need to have somewhat of your credit in order. You're still gonna need to have a good track record with the government. You can't owe, like say if you owe money from say a COVID loan or some shit like that, that's probably gonna flag your application. So make sure you got a clean record with the government, get your credit straight, and then apply for that loan. And there's even people out there that'll help guide you through it, like actual loan people or whatever. So you could get some guidance on that, and obviously the internet, ChatGPT. Use your resources at your fingertips before saying you can't make it work. And I just want to state this hemp loan is not available for cannabis. So any of these cannabis licenses, you can't get this hemp loan for. But in hemp, you have all these same components. You have a cultivator, you have manufacturing, you have distribution, and you have retail. However, if you're in the hemp market, you could get that loan. If you're in the cannabis market, you can't. So the next one on the list is state social equity loans. And to me, I'm writing this in red because it's somewhat of a joke. So even though they're out there, I'd take it with a grain of salt. I'm not saying to disregard them and just ignore them, but read through it with a fine-tooth comb, have a lawyer look through it before signing anything. At least have ChatGPT review it and pull out all the red flags. Because what happens with these state social equity things is they trap you. And when they get trapped, someone's gonna benefit from that. So what they're doing in New York, and again, I'm not in the inner workings of the New York license supply chain of how these licenses are getting issued out right now and approved and stuff like that, but it's a very hot topic in New York. So what happened was they issued these social equity licenses to social equity applicants who either were wrongly convicted of nonviolent cannabis crimes, lived in neighborhoods that were highly targeted for cannabis enforcement, and a few other stipulations. So basically in New York, they're saying if you fall in one of these categories, we're gonna give you priority for giving you a license. And a lot of times the people that will qualify, they might not have millions of dollars to go get their license. So, because even though they give you the license, they'll give you the piece of paper that says you're a license holder, but you still need a valid location in the right zone. And just to get that commercial location with good foot traffic, with the proper zoning, with landlord approval, is very tricky to do. And you're going to be personal guarantee on a lease for well over $1 million, which means the rent on that lease, you're going to have to sign a 5-year lease to a storefront. And that's going to be at least $1.5 million or so, the lifetime value of that lease. And so whether that store is successful or not, whether you get even to day one, to opening day, grand opening, doesn't matter. You got to sign that lease and leave that personal guarantee months before that door even opens. And a lot of times you're getting a raw, vacant commercial space. You got to remodel it. You got to get it up to code. You got to get city inspections on everything, on your plumbing, on your mechanical, on your electrical, on your ADA, which is your handicap stuff. So you got to have all these inspections signed off by the city. And say if you have delays on that, the landlord doesn't care. You're still paying your month. You're still paying your monthly rent. At best, if you get a commercial lease, you want to set it up with the landlord to where you have discounted rent the first few months or the first 6 months. Or ideally, what I used to do with my landlord when we expanded was request a certain amount of time at a lowered rent until the license is granted. And because you don't know if that license is going to be 2 months, 6 months, 12 months. So if you get your lawyer to put in a clause in your lease that protects you from having to overpay on rent until your license is actually either active or at least granted. So that's a way to shave off some, but basically you're paying all this rent. You sign a personal guarantee for 5 years before your license is even granted. That's why this is so expensive. So what New York did to trap people is they gave them state loans. And what I heard happen is these loans started coming due with something like 14% interest rates. And if you know about interest rates, you'll know that that's like highway robbery. Obviously, you might be used to hearing credit card rates being like 20% or whatever. We're talking 14% on $1 million, $2 million, like that's crazy. And on typical home loans, in the prime days, it was like 0.9%, 1%. And those were good loans, 2%, 3% even. Nowadays, it's 6%, 7%. That's if you got good credit, maybe 8, 9, 10%. So these loans are getting out of hand because of inflation. However, the state charging a social equity applicant 14% on $1 million loan is basically some form of like entrapment or whatever the word would be, but they're basically setting them up for failure. And what's happening is some of those loan payments are starting to become due, but they haven't even been granted the license yet. The state's holding them up. There's delays on all these other issues. So it's like the state basically set them up to fail, and then tying up all this time before they can even open for business. So now they're forced to either default on the loan or go get predatory lending partners potentially, which would be whether that be investors or go seek out other high-risk loans to just keep things going or to pay back the original loan. So you see you're going down this slippery slope. And really where I think the state's fucked up, and if they would have done it better, is instead of giving social equity licenses, the licenses are such a burden, is give them a certain amount to help start their brand, give them carte blanche on certain licenses, pair them up with licenses even, have the retailers reserve a section of their store for social equity brands, and make sure that they have a certain ratio between, average brand, regular brands and social equity brands. And that way it allows people to come in, operate their brand, get some funding to get started up, maybe have deferred costs on all these license things. Like if they need packaging, they get basically like credit that maybe the state could back to pay this manufacturer back if the brand defaults or something. But who knows? They could have done this a lot better ways rather than giving the social equity person one of these licenses that's going to be a burden to them. And chances are not even going to be able to make it profitable. Now, all these loans we're talking about, that's more so you need $1 million loans only if you're getting a license started up. If you're doing a brand, you could get a brand started up for less than 100 grand. You could get a decent brand started up for about 50 grand, including your packaging, marketing materials, and initial order sizes for at least 2 to 3 runs of a small amount of SKUs, meaning flower, vapes, pre-rolls. So what I'm getting at is you can either spend 1 million to 2 million to start one of these licenses, maybe even more, maybe even 3 million, or you could start a brand with 50K. Fuck it, let's splurge, let's say 100K. You're still 10% of the lowest of that. You see what I'm saying? So not only is it lower risk, it's lower startup cost. You don't need $1 million to just hit the ground running, and having that $1 million be you're still at the bottom of the totem pole compared to that guy with the $3 million and the store build out and the right address and in Midtown or wherever the hot spots are in New York. So it's like you're basically dependent on these large sums of money, which is hard to get any kind of loan or financing from. Maybe on a regular business, you can go get $1 million loan, or a real estate company or something. You can get these multi-million-dollar loans, but not for cannabis. So if you're just talking about a brand and you need funding for just a brand, honestly, nowadays, the quickest and best way to do that, if you got good credit, from what I've been seeing, and this isn't me giving you credit advice or financial advice, but it seems like for whatever reason, a lot of regular banks like Chase, Wells Fargo, Bank of America, some of these other banks too, are giving out 0% interest credit cards. So that's basically a 0% interest loan for anywhere from say 30,000 upwards of 100,000, 150,000. So I'm gonna put on this list here, number 5, granted it's a different type of funding, of financing, of loan, but we'll put business credit. And so with business credit, we're only gonna be talking, we'll say 50K to 150K. And like I said, I don't know about it, but it's something I've been looking into. I've been seeing a lot of people talking about it. So I'm like, what's going on over here? How are they doing this? How is it just like everyone can sign up for this type stuff? So what I'd recommend doing is look into that if that makes sense for you. If you are a social equity holder, maybe book a call with me. The link is below in the description, but book a call with me. I'll give you some insight on that, or maybe what I would do, and just kind of go from there. But the SBA loan is a really good one if you can get that and if you can qualify. So SBA might qualify for just a regular brand, or if you wanted to do this stuff but under hemp. So that would probably be your best bet. Specialized marijuana lenders, nowadays it's gonna be hard to find them. It's gonna be hard to get approved. If so, you're gonna need major references, a lot of back taxes, tax statements, bank statements, probably some kind of credit threshold. And then Safe Banking Act, we'll see if that actually goes through or not. I'm doing another video about Trump and the promises he made about the cannabis industry. So we'll talk more about that there, but that's definitely gonna be talked about. So if you made it this far, I got a lot of great content, not only on this channel, but on my private school community. And I'm also doing one-on-one guidance courses, basically walk you through step-by-step and even do it for you in some cases, such as what I'm doing with Dr. Reefer right now. We're building out his entire brand from start. He already had it started. We're helping to refine it. I got my design team working on it. They're some of the best in the country, just really dialing it in. He's super happy with the progress that we're making, redesigning his packaging, redesigning the marketing. So there's a lot of great aspects to working alongside with us. And then from there, I got him in touch with some of the top biggest distros in the state, to where not only is he able to get his flower needs all met there for his brand, but he's also able to deal with all his bulk clients there too. So it's a lot of great resources by doing our one-on-one guidance course, because not only do you get all the brand setup and development and design work done for you, but you're also getting all the connections you need to not only get your brand into licensed stores through the licensed supply chain here in California or New York, but you're also getting these connections for life to use as you see fit, as you need. And these are connections to some of the top people that can help guide you through this industry, that can, just knowing them is gonna add so much value to your journey in licensed cannabis. So take that for what it's worth. Check out my links below. I got a lot of great stuff, and I'm really here to help people build their brand from, whether that be from nothing, from wherever they're at upwards to $1 million a year brand. And if we can do that with 100 or more brands, that's $100 million we pull away from corporate cannabis, so we can stay focused and go up against, compete against corporate cannabis. We shouldn't be competing against ourselves, our independent brands. We need to stick together and take on corporate cannabis together. So thanks for watching. I hope this content helps everybody, and I appreciate the support.